Markets rebounded overnight, led by retailers and technology stocks. Joining me is business reporter Edward Boyd. Ed, good morning. What has the local stock market reaction been this morning so far?
Local stock market is up sharply this morning, up about 1.2% in early trade. It had its worst day of the week yesterday and it's bounced back today. That's thanks to strong showings from US markets overnight, particularly the S&P 500, which was up about 2%. That's all thanks to this US department store chain, Macy's, which overnight reported better than expected profits. So one of the trends we've seen over the last couple of weeks is US retailers putting out warnings around inflation, saying it's causing US consumers to prioritise spending on household items like food and vegetables and petrol over going into discretionary retail stores. But last night, Macy's bucked that trend and said it was a better than expected profit. It helped US markets and it's helped our markets today. And Danica, later today, we'll get the retail sales figures for Australia for the month of April, and retail spending here is expected to be at record highs in the month of April.
Yeah, that'll be an interesting figure, Ed. Also next week, Australia's GDP numbers will be released. The economy is expected to grow at a slower pace in the March quarter.
Yeah, the economy's still going to grow, but at a slightly slower pace. This is predictions from Commonwealth Bank, and retail spending is going to be a big one that goes into the GDP figures next week. Also, household consumption. So you can see CBA expect quarterly growth of about 0.5% and annual growth of 2.8% for Australia's GDP. So those figures will come out on Wednesday next week, and they're pretty significant for the Reserve Bank of Australia. We know they're lifting the cash rate slowly, and next meeting's just in a couple of weeks' time. It's expected to be up by another 25 basis points, the cash rate, and for it to continue rising at that rate until the end of this year. Danica.
OK, Ed, I'm sure you'll be across it. Thank you for that.